All right, the new Income Tax Act for 2025 is on the horizon, and I know what you might be thinking. You hear those two little words, tax audit, and maybe, just maybe, you feel a little bit of stress. But hey, it really doesn't have to be that way. In this explainer, we're going to break it all down, piece by piece, so you know exactly what's what.
We're not guessing here. We're going straight to the source, the act itself, to get a handle on one of its most important rules. So let's get to the chase and ask the real question. What on earth does this new law actually mean for your business? So here's our game plan. First up, we'll cover the basics of what an audit even is. Then, the big one, who actually needs to get one. We'll also dive into some special cases, walk through the whole process step by step, and, we have to talk about what happens if you don't comply. Simple as that. Let's get into it. Okay, first section, Audit 101. Before we start throwing numbers around, let's just take a step back and understand the why. What's the fundamental point of a tax audit under this new act anyway?
I absolutely love this way of looking at it. Seriously, try not to think of a tax audit as someone pointing a finger at you. It's not an accusation. It's just a mandatory financial health checkup for your business. It's a way to verify that your books are accurate and you're following the rules, which, when you think about it, is actually a pretty smart thing for any business owner. And the great thing is, all the rules for this are in one place, Section 63 of the Act. This one section has everything we need to know, so let's focus in and see what it tells us. All right, now for what's probably the most important question for you personally. Do you actually need to get an audit? This is the moment to really think about your own situation. Are you running a business? Are you a professional? Let's figure out if your numbers cross that line that makes a tax audit mandatory. Okay, let's get into the nitty-gritty. These are the magic numbers, right from Section 63. For most businesses, the line in the sand is a turnover of 1 crore rupees. If you're a professional, that number is 50 lakh rupees in gross receipts. But, and this is a big but, look at that middle one. If your business is mostly digital with less than 5% of your transactions in cash, that threshold shoots way up to a whopping 10 crore rupees. I mean, that's a pretty clear signal from the government, isn't it? They really want to encourage digital payments. So, if there's one number to remember, it's this one. 1 crore rupees. For the average business, this is the annual turnover that flips the switch on a mandatory audit. And if your business has gone digital, then this is your number, 10 crore rupees. That's a pretty significant reward for running a business with very few cash transactions. Okay, so it's not just about simple turnover. There are some special situations you need to be aware of. Let's talk about presumptive tax schemes, because this is where things can get a little tricky. So, with these presumptive schemes, the law tries to make your life easier. It just assumes your profit is a fixed chunk of your turnover, say 8%. But what if you look at your actual records and your profit was only 5%? Well, then you're basically telling the tax authorities, hey, I actually earned less than the standard presumed amount. And that right there is the trigger. If you use a presumptive scheme, but you claim a profit that's lower than the presumed rate, an audit becomes mandatory, as long as your total income is above the basic taxable limit. It's basically the law saying, look, you can take the easy route with the standard profit percentage, or you can prove your lower profit claim, but you've got to prove it with a formal audit. So let's say you've figured out an audit is definitely required for you. What happens next? Let's break down the actual process. Who's involved? How's it done? And what are the key deadlines you need to hit? First things first, who can even do this audit? The Act is super specific here. When it says accountant, it means a practicing chartered accountant. Not just any accountant, it has to be a qualified CA with a valid certificate of practice. The process itself is pretty straightforward, really. You find and appoint your chartered accountant. They go through your books for the year with a fine-tooth comb. Then they prepare a formal report with all their findings. And finally, you have to submit that report by a very important deadline. Now, this specified date is absolutely crucial, so listen up. This is not your tax filing deadline. I'll say it again, it is not your tax filing deadline. Your audit report has to be in 1 full month before you're supposed to file your income tax return. That is a huge detail you cannot afford to miss, so you've got to plan ahead. And that brings us to our final, and let's be honest, maybe the most motivating section. What happens if you miss that deadline or just don't get the audit done at all? Well, the consequences are spelled out very clearly in another part of the law, Section 446. This is the section that deals specifically with the penalties for not following the audit rules in Section 63. So, what's the damage? The penalty is actually calculated as the lower of two figures. They'll look at 0.5% of your total annual turnover, and they'll look at a flat sum of 1,50,000 rupees. Whichever of those two is smaller, well, that's what you'll owe. So the good news, if you can call it that, is that the maximum penalty is capped at 1,50,000 rupees. Even if 0.5% of your turnover is a massive number, there is a ceiling. Still, it's a significant chunk of change and definitely something you want to avoid. Let's do a quick recap of the most important points. 1. Know your turnover threshold. 2. Get that if you claim lower profits under a presumptive scheme, it can trigger an audit. 3. Remember that critical deadline. Your audit report is due a month before your tax return. And finally, 4. Not complying can be pretty expensive.
So there you have it. We've taken Section 63, which can seem pretty intimidating, and hopefully turned it into a clear, straightforward guide. And that leaves us with this final question. Now that you know the rules, is your business truly prepared for its annual financial health checkup? Because being ready isn't just about ticking a box for the government. It's about running a smart, transparent, and really successful business.